Let's get back to the debt ceiling conversation. And I wonder, we talked a bit in recent days about what this has done to Treasury markets. We've seen worry at the short end there. We've seen not so much worry perhaps in equity markets. We'll talk about that with our guest a little bit later on. But what about FX markets and the way you position in the dollar of all things around the possibility of any US default? I know colleagues have been talking about the dollar smile. Does that teach us anything here?
Yeah, I think that we might temporarily trade to either extreme of the dollar smile. So the idea of the dollar smile is that the dollar performs best either in global risk aversion or in an extremely positive world for US assets. But in that kind of middle world, people sell down the dollar as the world's reserve currency to leverage into higher yielding assets, into equities or to riskier assets. So just temporarily, we might shift into either end of the dollar smile, because if we make major progress on the debt ceiling, well, the main beneficiary there will be US assets. It'll temporarily be a super world for US relative to the rest of the world. However, if we continue to make no progress on the debt ceiling and the situation deteriorates, well, then it'll be global risk aversion, it'll be global deleveraging, which ultimately means retrenching back into the world's reserve currency, still is the world's reserve currency, which is the dollar. So I think dollar strength that started during the middle of last week can probably continue. And one final point, we did the MLive Pulse survey, more than 600 professional respondents about what they thought about the debt ceiling dynamics and what was the one trade you'd do if there's a US default. That overwhelmingly went for gold. But of the currency options, they went for dollar more than they went for the yen and the Swiss franc, which shows my view on this dollar smile isn't too out of consensus.
OK, that is really interesting, the way that the dollar could benefit even if we continue to have tension at least emanating from the United States, even if it affects the rest of the world. What about the prospects of a debt default? I know that you asked questions about that in the survey, and compared to 2011, the prospects looked elevated. Back then, we had a Eurozone debt crisis as well. I wonder how that complicates the mix.
Yeah, look, I think that people think that the prospect of a default this time is much greater because we know that politics has become much more fractious. Remember, it was only a few years ago that the Tea Party was seen as the most fringe part of the Republican Party, and now that's a much more kind of a mainstream view. So both sides have become much more entrenched in the US around this debate, but also the debt dynamics in the worst have got so much worse. US didn't have debt more than 100% of GDP. It's now way beyond that level, and the debt payments are accelerating massively given that we've got higher yields. So there's a much worse backdrop in terms of the debt. There's also a much worse backdrop in terms of politics. So people out there think it's unlikely we're going to reach a resolution, and therefore the default risk is higher. I'm going to go against consensus in this one and say that I'm not sure it is. I'm getting optimistic that there genuinely seems to be progress at the moment. Biden has a long history of working with both sides of the aisle in Senate, and therefore, I've really got my fingers crossed that we might make some progress this Tuesday. But if we don't, then we get into more dangerous territory because Senate's meant to be in recess and Biden's meant to go for G7.